10-year note yields end the week slightly lower. After a very busy week of data, inflation, a Fed chair testimony, again more data, ultimately yields rallied early in the week, got as high as 465 before reversing lower, closing out the week at 447, but not before hitting 445 today. So today we made our weekly lows before closing out just above there. As I said, a lot going on. We saw stronger inflation data, which pushed those yields higher. Then we had kind of a subdued testimony from the Fed chair, followed by weak economic data later in the week, which pushed yields lower. So ultimately, a bit of a tug of war as to whether we're looking at stronger inflation or weaker data as to what will push the Fed around. Well, at the end of this week, we still see at least one 25 basis point rate cut priced into the market, with leaning towards a possible second in the fourth quarter, but obviously a lot of time between then and now. But ultimately, we'll have to wait and see. Yields moved lower ever so slightly on the week, down 2 basis points after seeing a big move higher to start the week. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that volatility was in a free fall pretty much over the last week. However, today on Friday, we saw volatility firming up as we, again, had more questions than answers, whether it be about economic risks, whether it be about geopolitical risks, or whether it be about inflation risks. So there's a lot going on, and the market now starting to scratch its head after seeing a big move lower in volatility. Today, we saw volatility moving higher ahead of the weekend. Lastly, let's talk about what we have next week. Well, next week starts off with Monday as a U.S. holiday, President's Day, and we'll get some manufacturing data later on. We do get a couple of auctions, a 20-year and a 30-year TIPS auction, and then we'll get a lot of Fed speakers, obviously on the heels of the Fed chair's testimony, perhaps giving little tidbits of where they see the economy going and where they see rates going given the current economic picture. So a lot, not as much data, but a little more focus on Fed speakers next week. So a busy week in 10-year note yields. An early rise in yields quickly reverses and ends the week lower ahead of next week's U.S. holiday on Monday, President's Day, manufacturing data, a couple of auctions, and lots of Fed speakers.